I'm Danielle Hale, Chief Economist at Realtor.com. We're already a few weeks in, but let me wish you a happy start to the new year as we dive into what you need to know. The calendar has changed, but economists are still closing the books on 2022. One key year-end highlight is that consumer price inflation slowed to its lowest rate in at least a year for both the overall and core measures. As inflation eased, however, consumers slowed their spending. Retail sales dipped from November to December and were roughly on par with inflation when compared to 1 year ago. As investors weighed mixed economic data, mortgage rates dropped to their lowest level since mid-September. While recent lower mortgage rates have improved homebuyer sentiment slightly, they remain more than twice as high as they were 1 year ago, and still create financial barriers for many buyers, especially first-time homebuyers. Turning to housing data, the Housing Market Index shows that builder confidence rose for the first time in 13 months, as lower than expected mortgage rates raise hopes. Even though builders continue to offer pricing incentives, the ratings of current and prospective business improved in January. Meanwhile, total construction slowed in December, and compared to last year, both single-family and multifamily starts are down. However, single-family housing starts improved in December to the highest pace seen since August. Notably, there's a mammoth supply of multifamily units under construction, which will eventually help boost housing supply for renters. For the third consecutive month, the number of multifamily units under construction hit a new all-time high. December sales of existing homes registered a pace of just over 4 million. This is down from both November and the prior year, and nearly on par with the 2020 early pandemic low. Most homeowners still have a significant equity cushion that should give them a good number of options if they are contemplating a sale. However, evaporating demand has ended the strong seller's market of the past several years, and falling home sales tell us that many buyers are still not able to afford a purchase or not yet convinced that the market is tilted sufficiently in their favor to move forward. The housing market is in nobody's market territory, as buyers and sellers remain largely in a stalemate. Looking ahead, the stalemate won't last forever. Realtor.com's December housing trends show that although nationwide prices continue to climb, some markets saw mild year-over-year declines in median home list prices. Further, as the number of homes on the market rose, sellers were nearly twice as likely as last year to adjust their price lower. Buyers will still have to be mindful of costs, which continue to eat up a large share of their budget, but there are reasons why 2023 may offer opportunities. Renters hoping to become homeowners may take advantage of the pockets of affordability identified in our best markets for first-time homebuyers in 2023, which are found in all 4 regions of the country, with a heavy concentration in the Northeast. You'll find the details, along with our housing data for download, at Realtor.com/research. And it's also featured in our interactive outlook at Realtor.com/housing forecast. You can also follow us on Twitter for real-time updates.